Next is exchange. Okay, so class, what is an exchange? So an exchange is when the property, plant, and equipment is acquired in exchange for a non-monetary asset or a combination of monetary and non-monetary asset. Okay, so meaning we are to exchange our, let's say for example, we are to exchange our equipment from the equipment of another company. So that is still a way of acquisition. Now, how are we going to record that one? Now, accordingly, if such um if such transaction happens, then the PPE acquired is measured at fair value. Okay, is measured at fair value unless the exchange transaction lacks commercial substance. Okay? Lacks commercial substance. Now, what do we mean, class, by commercial substance? Now, a transaction has a commercial substance. So, when the expected cash flows alter the exchange differ expected cash flows after the exchange differ significantly relative to the fair value of the asset exchange from the expected cash flows before the exchange. So say for example, if we have a machinery and using that machinery we are having cash flows of, let's say, 100,000 a year in our company using that machinery, and then after we exchange the machinery, so we exchange it to another machinery from another company. So the current cash flows now is, let's say, 300,000 pesos per year. So there is a significant difference as to what happened to the cash flows of our company due to the exchange of machinery. So meaning, class, if there is a significant difference, so such transaction is considered as with commercial substance. But if there is no significant difference, so let's say for example, this machinery can give us a cash flow of 100,000. If we were to exchange it to another machinery, it gives us a cash flows of still 100,000, or let's say 120 to 150,000. So there is no significant difference, and so therefore such transaction lacks commercial substance. Okay. So if an entity is able to determine reliably the fair value of either the asset received or the asset given, the fair value of the asset given is used to measure the cost of the asset received unless the fair value of the asset received is more clearly evident. So therefore, okay, with that statement, here is the order of priority of an exchange. So in an exchange where there is no cash involved, the order is first the fair value of the property given, second is the fair value of the property received, and third is the carrying amount of the property given. Meaning, if we are to acquire a machinery, the measurement of our machinery is equal to the fair value of what we have received, what we have given up. Okay? If there is no fair value of the property we have given up, then we will use the fair value of the property that we received. But if there is no fair value still of the property received, then we will have to resort for the carrying amount of the property that we have given up. Now, what if there is no carrying amount? Then that is not okay, that will never happen. There's always a carrying amount of the property given because carrying amount is what we recorded in our financial statements. Therefore, there is always a carrying amount, and this will be our last resort if there are no given fair values of both the asset given and the asset received. Okay, so there's a note here that letter A, or the fair value of the property given, is preferable. Why? Because this approximates a cash transaction. The acquisition is conceived as a two-way transaction, meaning as if the investment is sold at its fair value and the proceeds is used to acquire equipment. So what is the reason, class, why fair value of the property given is our first priority in the measurement? Because, class, measuring our new acquired, let's say, new acquired property, measuring our new acquired property in exchange of our old property, measuring it at the fair value of the property that we have given up, it is just like the old property that we have given up was sold. and the cash that we receive for such asset is paid to the new equipment. So that's why it is more reasonable to use the fair value of the property given. Now let us answer Smile Company. Smile Company exchanged used equipment for another equipment of Frown Company. The following information pertains to the exchange. So we have the equipment at the book value, accumulated depreciation, and the fair value of the equipment. Prepare journal entries on the books of Smile and Frown. So we are going to prepare journal entries for both of the entity. Okay, let's start with Smile. Okay. So, since the first priority class is the fair value of the property given, so fair value of the property given, okay, in the case of Smile, this is the journal entry. Okay, so that would be the debit to, this is an equipment, so debit to equipment new, okay, and that amounts to how much? Accordingly, the equipment new should be measured at the fair value of the property given. So how much is the fair value of the property given by Smile? That is 500,000. So we have to record it at 500,000. Okay. What are we going to do with our old property? We will derecognize it because we are all ready to give it to Frown Company. So the equipment old, okay, the equipment old will be credited. Okay, so credit equipment old of 1,400,000. And of course, we also have to cancel the accumulated depreciation. Since the normal balance of the accumulated depreciation is credit, then canceling it would be to debit it. Accumulated depreciation is 2 million pesos. So there is a difference. So what is that difference? So the balancing figure is 100,000. So what is this 100,000? Now class, since we exchange our equipment from the equipment of another company, there is a possibility that the prices are not equal. And so therefore, there could be a gain or loss on the transaction. Now, how do we compute the gain or loss on this exchange? So, take note of this class. The gain or loss of an exchange, the gain or loss of the gain or loss of any asset that you're going to sell or any property that you're going to sell, or exchange, the formula is always the fair value of the asset given less the carrying amount of the asset given. Okay, take note ha, this is always the formula for the gain or loss. So if that is positive, then gain. If that is negative, then that is a loss on exchange. Now let us see. The fair value of the asset given is 500,000. How much is the carrying amount of the asset given? The carrying amount is, we have 2,400,000 book value, while the accumulated depreciation is 2 million. So how much is the carrying amount? That is already 400,000. So did we incur a gain or loss? So we have a gain of 100,000. So that is what you can see in our balancing figure. So this is our gain on exchange of 100,000. That is fair value of the property given as a measurement. Now, how about class? Let's say, for example, what if the fair value of the property given is not, but before that, let us first compute how did we, okay. Now, class, what if there is no fair value of the property given? So as what I have said, if there is no fair value of the property given, then we will have to resort to the fair value of the property received. But in this case, class, fair value of property received. But since in this case, the fair value of the property received and the property given is just the same, okay, so you can see it is still 500,000. So more or less, our journal entries is just the same. Okay, so this will be equipment new of 500,000 since the property received is also 500,000 in fair value. And for the equipment old and accumulated depreciation, the same. And of course, the gain on exchange is also the same because we have the same amounts. Now, if the equipment received also has a different fair value from the first one, then of course we will have different answer for this one. But since in this problem it is just the same, then our journal entries are just the same. Now, just take note that it is not all the time that the journal entries in the number 2 priority is the same with number 1. Okay? It's just that in this problem, the amounts were the same. That's why the journal entries are the same. And next class, number 3. Now, what if class there is no given fair value of the property received? What if we cannot determine the fair value? So we will have to resort to the carrying amount of the property given. Now, how much is the carrying amount of the property given? As what we have computed, that is 400,000. So the equipment new will now be recorded as 400,000. For the equipment old, okay, that is still 2,400,000 and the accumulated depreciation is 2 million. And take note class that with this problem, with this journal entry, we already have a equal debit and credit. Okay, debit 24, credit 24. So as you can see, there is already no gain or loss on exchange. Why? It's because we cannot we did not use the fair value. Okay, what we use is already the carrying amount. So carrying amount versus the carrying amount, there is no gain or loss on exchange. Okay, so that is how do we record exchange. And next problem, okay, that is for illustration 6. Now next problem, illustration 7. Sorry, we still have to make journal entries for Frown Company. Okay, Frown Company. So for Frown Company, the same with here, debit, equipment. Okay, debit, equipment new. The equipment new, using the fair value of the asset received, that is, fair value of the property given, that is 500,000. The equipment old of Frown is 2,200,000, while the accumulated depreciation is 1,750,000. Okay, so how much is the gain or loss on exchange? Let us use this formula to get the gain or loss on exchange. So the fair value of the asset given is 500,000, while the carrying amount is, that is 2,200,000 minus 1,750,000, so that is 450,000. Okay, is that right? 2,200,000 minus 1,750,000. So 2,200,000 minus 1,750,000, that is 450,000. So we have gain of 50,000. Okay, the gain of on exchange is 50,000. So let us see if it is balanced. 500 plus 1,750, that is 2,250. 2 plus 50, that is 50,000. Okay, that is for Frown Company. Now let's proceed to illustration 7. Alright, illustration 7. So there is cash involved. If you remember in our example in illustration 6, this is only a pure exchange where our acquisition of the PPE is exchanged for a non-monetary asset alone. Now, what if class if we are to acquire our PPE in combination of a monetary and non-monetary asset? Meaning, aside from the property that we have given up, we also have to add additional cash for the exchange. So what would be our journal entry? Let us try this example. Illustration. Before that, there is cash involved. The cost of the property is equal to the following. So first, fair value of the asset given plus the cash payment if you are the payer, and fair value of the asset given minus the cash received if you are the recipient of the cash. Let us try A and B. Now, A and B exchange equipment. Okay, we have here the equipment, accumulated depreciation, carrying amount, fair value, and the cash paid by A to B. Now, what would be the journal entry class? Alright, now let's start with A. What is the journal entry on the part of A? So, it would be debit to equipment new, since A purchased an equipment. So, how much is the equipment new? Since we are to record it at the fair value of the asset given, the fair value of the asset given is 600,000. Okay, so that would be our 600,000. So that would be the fair value. But take note that we also have to add the cash payment. So 600,000 plus the cash payment of 200,000. Take note, A is the payer of the cash. So equipment new is now 600,000 plus 200,000 cash payment. So this is 800,000. Okay, so after we record the new equipment, we will have to cancel our old equipment from our record. So credit equipment old. So for the equipment old, we have a book value of 1,600,000. Aside from this one, we also have to cancel the accumulated depreciation. Now, the accumulated depreciation is 900,000. Okay, so it is just the same with the previous one. After this one, aside from the equipment old that we have given up, we also have given cash to B. So this is 200,000. Now this time class, let us compute whether there is gain or loss on the transaction. So what is the formula for the gain or loss? That is the fair value of the asset given minus the carrying amount of the asset given. So the fair value of the asset given, as you can see, that is 600,000. And the carrying amount, that is 1,600,000 minus 900,000, that is 700,000. So how much is the gain or loss on exchange? So that is 600,000 minus 700,000. So we have 100,000. Okay, so we have loss on exchange of 100,000. Okay, so the same with the previous one. The difference here is just that there is cash involved, which we added in our asset given up. The rest, it is the same when there is no cash involved. Okay, that is as easy as pie. Alright, now let's proceed to the book of B. Okay, so this is on the part of A. Now, how about on the part of B? Okay, what would be the journal entry? Now, since B is the recipient of cash, so the measurement of the new equipment would be different on its part. So, equipment new of B. So, the fair value of the asset given by B is 800,000 minus the 200,000 cash paid, so that is 600,000. So as you can see, class, in the part of B, the equipment now is recorded as 600,000, which is equal to the fair value of the equipment given by A. Okay? And also on the part of A, the fair value given by A is 600. But the entity added 200,000 to make it 800 because the fair value of the equipment of B is 800,000. So meaning class, the 200,000 made by A to B is the difference in fair value. Right? 800,000 and 600,000, that is 200,000. On the next one, same, we'll have to cancel the equipment old. So for B has equipment of 200,000 and the accumulated depreciation is 1,350,000. And of course, since B is the recipient of cash, this debit to cash of 200,000. Now let us see whether there is a gain or loss on this exchange. So let us copy this formula. Fair value of the asset given on the part of B, that is 800,000. Carrying amount of the asset given, B has 2 million equipment minus the accumulated depreciation of 650. So we have 650,000. So for our gain or loss, 800 minus 650, we have 150,000 pesos. Alright, so the gain or loss, the gain on exchange is 150,000. Okay, gain on exchange is 150,000. Let us check if our journal entry is balanced. 600 plus 1,350 plus 200, that is 2,150. And for the credit, 2 million plus 150, that is still 2,150. So this is our exchange transaction. Alright, now next, let's proceed. If the exchange transaction lacks commercial substance, the cost is measured at the carrying amount of the asset given us. So, lately we've discussed about the commercial substance, right? The definition of the commercial substance. Now, what if class, if the transaction lacks commercial substance? Now, class, instead of using the fair value of asset given up plus cash payment, we are now to use the carrying amount. Okay, so meaning that would be carrying amount. Okay, I'm going to copy this one. Carrying amount Alright, so this is now the carrying amount of the asset given on the part plus cash payment on the part of payor, and carrying amount of the asset given minus the cash payment on the part of the recipient. Alright, now let's try to answer illustration 8. Y and Z exchange equipment. So we have here the information for the equipment, accumulated depreciation, carrying amount, fair value, and cash paid by Y to Z. The cash flows of the asset received do not differ from the cash flows of the asset transferred. So, since the cash flows do not differ, so this is the indication that this transaction lacks commercial substance. Now, how do we journalize for that? So, let us first start on the part of E, which is the payer of the cash. So, the same process, debit, equipment, new. So, that is carrying amount of the asset given up plus the cash payment. So how much is the carrying amount of the asset given up by Yi? Since Yi has an equipment of 800 minus the accumulated depreciation of 380, so the carrying amount is 420. plus the cash paid by ye, that is 50. So the equipment new is 470,000. Next is cancel our old equipment. So equipment old, we have 800,000 minus the minus the accumulated depreciation, that is 380,000. Then of course, aside from the equipment given, he also paid cash of 50,000. Okay, so is there still an imbalance in our journal entry? For the debit, we have 470 plus 380, that is 850. And for the credit, we have 800 plus 50, that is 850. Therefore, class, if you notice, we have no gain or loss on exchange because in a transaction with no commercial substance, no gain or loss is recognized. Okay? But if you're going to measure the gain or loss, class, we will not have a balanced journal entry anymore because with just these transactions or with just these account titles, our journal entry is already balanced. Okay? Now next, on the part of Z. Okay. So on the part of Z, still that is equipment new. For the equipment new, we have the fair value of the asset given, that is 500 minus the 50,000, since the Z is the recipient of the cash. So this is now 500 minus 500 minus 50,000. This is a sorry, this should be okay, sorry. That is the carrying amount. Okay, so on the part of Z, since Z is the recipient of cash, so the measurement on the part of Z is carrying amount minus the cash received. So how much is our carrying amount? So our carrying amount is the 1 million equipment of Z minus 400,000 accumulated depreciation, that is 600,000, minus the 50,000 payment. So we have equipment new of 550,000. Next is to cancel the old equipment minus equipment old, that is 1 million, and the accumulated depreciation is 400,000. Alright, and then we will add the cash that we receive or that be received. So debit cash of 50,000. If you're going to add 550 plus 400 plus 50, that is 1 million. Okay, so this is how we journalize our exchange transaction. Alright, now next, let's proceed to the next way of acquisition. Okay, next we have trade in. Okay, trade in. Illustration 9. Alright, so trade in, class, is actually a form of exchange. But the property is acquired by exchanging another property as part payment and the balance payable in cash or any other form of payment. It involves a non-dealer acquiring the asset from a dealer. Okay, and it involves significant amount of cash. So trade-in is also an exchange, but there is a difference with the journalizing. It's because, class, trade-in is a transaction between a non-dealer and a dealer of the asset. So meaning this is just like you will purchase a motorcycle and then in payment of the new motorcycle, you will have to trade your old motorcycle, and then you're just going to add cash for that transaction, since what you traded in, the motorcycle that you traded in, is already old, and then you're going to acquire new one from a dealer of the motorcycle. So take note of this one, that this transaction is between a dealer and a non-dealer. Okay, unlike with the mere exchange where there is two non-dealers who exchange their um properties. While in the case of trade-in, this is a non-dealer and a dealer. Now for our order of priority, so we have fair value of the asset given plus cash payment, and trade-in value of the asset given plus cash payment. Take note that the company who gives the trade-in is always the one who pays the cash, because such company is the one who will purchase the new property. Let us answer illustration 9. Okay, so we have here old equipment and the new equipment. Now, how do we journalize if we are going to purchase new equipment and trade in our old equipment? First priority is the fair value of the asset given plus cash payment. So, class, in the fair value of the asset given plus cash payment, is what we call the fair value approach. And take note, this is our first priority in measuring our traded merchandise. Now, for the new equipment that we acquired, so that would be a debit to equipment new. Now, how much is the measurement? Since it should be fair value of the asset given plus cash payment, so we have fair value of the asset given, that is 350,000, plus our cash payment. Our cash payment is 1,500,000. And so therefore, for the equipment new, that is 350 plus 1,500, we will record 1,850,000. And after that, class, we will cancel our old equipment. So we have here equipment old, is 1,400,000, and of course, cancel the related accumulated depreciation of 1 million. Okay. Now, next one is to recognize any gain or loss on exchange of the transaction. Alright, so for the gain or loss, is what I have said, that should be the fair value of the asset given up as the carrying amount of the asset given up. So the fair value of the asset given up is 350,000, while the carrying amount is 1,400,000 minus 1 million, that is 400,000. So our loss on exchange amounts to 50,000 pesos, because the carrying amount is higher than the fair value. Now, to record our loss on exchange, that would be a debit to loss on exchange amounting to 50,000 pesos. Okay. Now, aside from that, we also have a cash given of 1,500,000. Now, let us see if our journal entry is balanced. 1,850 plus 1 million plus 50, that is 29. 1,400,000 plus 1,500,000, that is still 29. So, therefore, this answer is already the correct journal entry. Now, next, class, what if, class, the fair value of the asset given is not clearly determinable? Then by that case, we will have to resort to trade-in value approach. Under the trade-in value approach, we will measure our new equipment using the trade-in value of the asset given plus cash payment. Now, this is in effect the fair value of the asset received. Okay. Now, equipment new, which has a fair value, which has a trade-in value of 500,000 plus the cash payment, which is 1,500,000. So that is 2 million pesos. The next one is cancel, of course, the old equipment, which has a cost of 1,400,000 and accumulated depreciation of 1 million pesos. Next, we will record the cash paid, that is 1,500,000. 1,000. And lastly, the gain or loss on exchange. So for the gain and or loss on exchange, instead of fair value class, since the fair value is not given, then we will use the trade-in value. So for the trade-in value, we have 500,000 minus the carrying amount of the same, that is 400,000. So we have gain on exchange amounting to 100,000. Okay, so this is our gain on exchange that is to be recorded as credit. Gain on exchange of 100,000. Now class, let us see if our journal entry is balanced. 2 million plus 1 million, that is 3 million. 1,4 plus 1,5 plus 100, that is 3 million pesos. Okay, so this is how you will record the trade-in of a property, plant, and equipment. And lastly, we have construction. Okay, so class, it is not all the time that we are to purchase our property. If you notice that in your home, you do not always purchase your, let's say, bed frame, because there are times that we have it self-constructed. We do not always purchase all our cabinets, because there are times that we can have it self-constructed. So that is just the same in our company. Instead of, let's say, instead of purchasing a furniture and fixtures, then the company may think constructing such furnitures and fixtures will give us less cost than purchasing for a new one. Now, how do we account for a construction of a property, plant, and equipment? So just like in manufacturing goods, these are the costs that is to be included. First, direct cost of the materials. Second, direct cost of labor. And third, indirect cost and incremental overhead specifically identifiable or traceable to the transaction. In short, materials, labor, and factory overhead. Okay, now let's start with illustration 10. Acrophobia Company summarized manufacturing and construction activities for 2014 as follows. We have materials and direct labor. We have for the finished goods, and we also have for the machinery. Overhead for 2013 was 75% of the direct labor cost. Overhead in 2014 related to both product manufacture and construction activities amounted to 3,600,000. So meaning 3,600,000 is our actual overhead. Factory overhead is based on direct labor costs. Calculate the cost of machinery. Okay, so how do we calculate the cost of machinery? So simple, that would be the direct materials, direct labor, and the factory overhead that is allocated to such machinery. For the materials, we have 500,000, direct labor 1 million, and for the factory overhead, since the factory overhead is 3,600,000, we are going to allocate this one to the finished goods and machinery. Now, how are we going to allocate? Since our factory overhead is based on direct labor cost, then we are going to allocate using the fraction of the direct labor cost. So we have here the finished goods and then the machinery. The direct labor for the finished goods is 4 million. The direct labor of the machinery is 1 million. That is for a total of 5 million pesos. Now, to get the fraction, of course, we have the 4/5. Okay, we have 4/5. Okay, we have 4/5 and 1/5. Now, to allocate the factory overhead, we have a total of 3,600,000, and then 3,600,000 multiplied by 4/5 and 3,600,000 multiplied by 1/5. Okay, that is 2,880,000 and 720,000. Okay, now let us try to add 2,880,000 plus 720,000, we can get 3,600,000. Now, the one that is allocated in the machinery is 720,000. So, how much is our initial cost of the machinery? So, we have 500,000 plus 1,000. 500,000 plus 1 million plus 720,000, that is 2,220,000. Okay, that is the cost of the self-constructed machinery. So that would be all for this lesson. I hope you understood well. In case you didn't understand, you just have to replay this discussion. So see you. Thank you for listening and see you in our video conference. Goodbye, everyone.